just to kind of get started here. And this one gives you kind of a rundown of the difference between employees versus independent contractors. This is a very important concept because everything that we talk about in this class pertains to employees, not to independent contractors. We will do a little bit of calculation on what's called self-employment tax, and that is for independent contractors, but our main focus here is payroll accounting. Payroll only pertains to employees, individuals who are employees, not individuals who are what we call independent contractors, and we'll go through a little bit more in the details of that definition. So this is a really important distinction to make. Like I said, it's not just the FLSA that pertains to employees, but not to independent contractors. It's also the other laws that we're going to talk about: the income tax laws, the Social Security tax laws, the Medicare tax laws, the federal unemployment tax laws, the state unemployment tax laws. So that's why we spend our time here defining, studying the difference between those two, okay? And so we'll go ahead and watch the video, and then we'll talk a little bit more about what that distinction is, okay? Make sure. Wait a second.
Should all abortion be illegal?
Let's see.
Legal in it.
Sorry.
Says you can skip in a second.
Yeah. There we go.
Employee versus independent contractor.
Let me get the volume up here. Thanks. Hopefully it's loud enough. It says it's all the way up. I hope this is loud enough. Nope, don't mute it.
Employee versus independent contractor, the 21st century showdown. In today's ever-shifting economy, many job seekers are hesitant to ask too many questions during the interview process. They don't want to risk losing an employment opportunity. However, job seekers may be doing themselves a disservice by not clarifying whether the position is an employee or an independent contractor position.
You guys hear that?
Whether the prospect will be considered an employee or independent contractor has numerous
Can you hear?
impacts on various important
Sorry.
employment characteristics.
Can you hear it okay? I know it's low. I don't know why. But it's up as high as I can get it on here. The setting is as high as I can get it, so. Oh wait, audio. There's any other audio. Or here. Okay, just focus. So you can hear it. Okay, let me get it started in here.
Employee versus independent contractor, the 21st century showdown. In today's ever-shifting economy, many job seekers are hesitant to ask too many questions during the interview process as they don't want to risk losing an employment opportunity. However, job seekers may be doing themselves a disservice by not clarifying whether the position is an employee or an independent contractor position. Whether the prospect will be considered an employee or independent contractor has numerous impacts on various important employment characteristics, such as wages, taxes and withholdings, fringe benefits, behavior and relationships, schedules, and record keeping. First, we need to define employee and independent contractor. Then we can examine the important differences between the classifications and the ramifications that incorrect classifications can have on both the employer and employee. Currently, the federal government has not established a comprehensive statutory scheme to distinguish between employee and independent contractor. Instead, different agencies define the distinction for their own purposes. According to the United States Small Business Association, an employee is defined as someone who performs duties dictated or controlled by others, is given training for work to be done, and works for only one employer. The National Labor Relations Act defines the term employee broadly. Instead of limiting the term employee, it includes anyone not excluded. Because someone who operates under a business name or under his own name may have his own employees, may maintain a separate business checking account, may advertise his business's services, invoices, or work completed, has more than one client, has his own tools and sets his own hours, and keeps business records. The IRS defines a person as an independent contractor if the payer has the right to control or direct only the result of the work, and not what will be done and how it will be done. Some states have defined these terms and addressed the problematic overlap of definitions by providing guidance using a classification test. For example, in Mexico, an individual is classified as an independent contractor if he meets all of the following standards. 1. He provides labor or services free from direction and control over the means and manner of providing the labor or services. 2. He obtains business registrations or licenses required by state law or local ordinance. 3. He provides labor or services and furnishes the tools or equipment necessary to provide the labor or services. 4. He retains the authority to hire and fire employees to perform the labor or services. 5. He receives payment for labor or services on completion of the performance of specific portions of a project or is made on the basis of periodic retainer. And 6. He represents to the public that the labor or services are to be provided by an independently established business. Essentially, employees get paid for work under direct supervision of the employer, while independent contractors take on a job for a price, decide how the work will be done, and decide if it is necessary to hire others to help do the work. There are many practical differences between employing an employee and independent contractor. Taxes. The issue of withholding taxes is critical to this dichotomy. It is the responsibility of the employer to withhold an employee's federal and state income taxes. The employer is also required to pay the withheld taxes to the IRS and any applicable state agencies. People working as independent contractors, on the other hand, must pay their own income taxes, and the employers, in most cases, need not withhold the taxes. Social Security and unemployment. A second distinction between employees and independent contractors concerns Social Security and unemployment insurance. In most cases, employers are required to make payments into Social Security and unemployment insurance on behalf of employees. Independent contractors make their own contributions to Social Security. An employee also need not purchase unemployment insurance for independent contractors because the independent contractor is viewed as self-employed. Healthcare and retirement benefits. When employers offer certain retirement plans, those employers must make the retirement accounts available to all employees. Unlike employees, independent contractors are not due any sort of contribution toward a retirement plan or account. Other fringe benefits, such as healthcare coverage, vacation time, and sick leave, are similar to retirement plans. These benefits are available to employees under myriads of federal laws and regulations, but not to independent contractors. The current patchwork of laws across the United States makes it difficult for individuals and potential employers to differentiate between independent contractors and employees. Clarifying this confusion is important because of the harm the stakes may inflict on both workers and employers. Some of the harms caused by incorrect classification include employees may lose employment benefits such as health insurance, sick days, overtime, Although a job seeker may hesitate to do so, one issue that must be clarified in the hiring process is whether a prospective worker will become an employee or independent contractor. Once classified, it is extremely important to understand what that classification means in terms of pay, taxes, benefits, and scheduling. As technology continues to advance and more people are able to work on remote and per project basis, more people find work that falls in the gray areas between employee and independent contractor. As such, knowledge of this area and understanding its importance is more important than ever.
All right. Thank you for putting up with that. I don't know what's wrong with the volume here.
These car hacks are going,
And then that volume was fine. All right, so they use the word control a lot in the video, and we're gonna be talking about control here. Essentially, the distinction between employee and independent contractor can come down to that one word, control. Who controls how the work is done, where the work is done, when the work is done, who controls how much the worker is paid for that work. Those are different means of controls, and these means of control can fall under essentially these two main categories of behavioral control and financial control. So when I'm talking about behavioral control, I mean, does the employee, or I'm sorry, I should have used the word worker. Does the worker have the ability to control how the work is done? So if I am a worker and I'm given a job, let's just say I am a bookkeeper, and I can decide, that I'm going, first off, that I'm going to take particular work or not take particular work. I'm going to decide that I'm going to do the bookkeeping for a company or not do the bookkeeping for a company. I have control over that decision. I can decide what software I'm going to use. Am I going to use QuickBooks? Am I going to use Great Plains? Am I going to use some other type of software? I have control, that's my behavioral control, over the types of tools that I'm going to use. If I have control over when I do the work. So I decided that I'm going to do some bookkeeping work for a company. I've decided I'm going to use QuickBooks. But I have a day job, so I'm going to do that work at night. I'm going to go get the work that needs to be done from the company, and then I'm going to do it on my time. I decide when I'm going to do it. These are all things that are under my control, which would probably indicate that I'm an independent contractor and not an employee. Whereas if the company says to me, you are going to do the bookkeeping for XYZ company, you are going to do it between the hours of 8 and 5. You are going to do it using QuickBooks. They're telling me what tools I'm going to use, when I'm going to use those tools, and they tell me how it needs to be done. Maybe they give me the training as well on using QuickBooks. Now that control rests with the employer or the company, which would indicate that I'm probably an employee. Maybe it's the exact same work that's being done. Right? It's the same company that I would have done the work for, same work that would have been done using the same tools, but depending upon who is controlling that and making those decisions will help to determine whether or not I'm an employee or an independent contractor. Now, those are behavioral types of controls, and just some examples. There are lots of different examples of behavioral types of controls. Then we come to financial control. If I determine how much I'm going to charge that company for the work that I'm doing, I say I charge $80 an hour, and I will invoice you, and you'll pay me every month that $80, then I have financial control over that. If I'm the one that's investing my own funds, my own capital into the assets that I'm going to use, so for example, I buy the QuickBooks software. I buy the laptop that I'm going to use. I use my own office space in my house. Well, that's my financial control, right? I have the financial burden, but I also have the financial control. That would indicate that I'm probably an independent contractor. If, however, However, the employer is the one that's providing me with the tools. They provide me with the laptop. They provide me with the workspace in order to do it. Now, that's not to say that you can't have employees that work at home. You can, right? Each of these factors is not independently a deciding factor on whether somebody is an employee or a contractor. You have to take all of the facts and circumstances together. So in my example, for financial, if the employer is providing the laptop and the employer has purchased the QuickBooks software and the employer says you are going to get paid $25 an hour and we're going to pay you on a bi-weekly basis, now the employer or the company has control over the financial features of that work. And they're the ones that would indicate then that I am an employee of that company, right? Has anybody ever been an independent contractor? No? It's where you get paid? Yeah, Anthony? You have?
Yep.
So what, can you tell us a little bit about that?
So down at Lake Thunderhead in Unionville, Missouri, I was independent and I kind of did through the entire lake. I went around, I verified that people were following it's effectively an HOA, the whole thing.
Mm-hmm.
So I went around, I did that, and then I was allowed to, while I was doing that, I could be like, hey, your bushes or your railroad ties, I'll fix it, but it's this much, and I could go
Right.
around. So they had me going out inspecting and also fixing.
Sure, but you had the discretion
Yep.
to decide how much you were going to charge for that, when that work was going to be done, and all that. So you had control over.
The only
Those
stipulation
features.
I had was this section had to be done this week, this section had to be done the next.
Right.
So I was
Right.
kind of on a schedule, but
Yeah.
I had to pay my own taxes.
Right.
And all that.
Yeah. But so you had deadlines,
Yep.
obviously, but it wasn't. You've got to do this on Tuesday at 2:00. You've got to be there. So you still had control for the most part over your schedule.
Yep.
And when that work was going to be done. So there is, and now all of this, like I said, we are concerned about this because it's only the employees. As payroll professionals, we are concerned about the employees and the regulations that we need to follow in order to be in compliance with all of those laws that we talked about. And it only pertains to employees. All of these laws, including the FLSA, which we're going to get into a little bit more detail on, do not pertain to independent contractors. Okay, so there is no minimum wage requirement for independent contractors. There is no overtime pay for independent contractors, right? There's the record keeping, there really aren't record keeping per se requirements for independent contractors. Now there also, as far as child labor, there may be certain other restrictions though with regard to that. That one's a little bit different. And as the video pointed out, different types of agencies have different sort of definitions of what an employee is and what an independent contractor is. We're mainly concerned with the IRS and what their definition is. They have what's called an economic reality test. Is this big enough for everybody to see here? Let's see. Now it's too big. All right, how do I get this out of here? Sorry, now it's too wide. And it's a lot of the things that I just talked about. It evaluates 6 particular factors that are used to determine whether a worker is an employee or is an independent contractor. An independent contractor, I still can't see all of it. How do I get this up here? Well, it's just gonna have to be a little bit smaller. All of these factors are evenly weighted, and over the last few years, they've actually changed some of, not really changed the factors, but they've tried really hard to make it clear, more clear cut for workers and companies as to what is an employee versus an independent contractor. But as I mentioned, there really isn't one clear cut definition. And as a result, this is an area that's highly litigated. There are a lot of mistakes that are made, both honest mistakes and intentional mistakes that are made by companies with regard to misclassification of workers. So Can anybody think, before I go through these, can anybody kind of think, now that we've gone through the issues of control, do you think an employee or a worker would rather be an independent contractor or an employee? Remember, employees are covered and protected by all of those laws that we talked about, but their independent contractors are not. What do you think would be more beneficial? I know that's a general question. It's a kind of a case-by-case basis, but
Generally, employees probably better.
yeah. Generally speaking, maybe an employee, because you do have more protections, right? You're guaranteed overtime for hours over 40 hours a week. You're guaranteed a minimum wage. You're guaranteed benefits under unemployment. If you're an independent contractor and you lose your work, you don't get unemployment benefits.
But as an independent contractor, if you're given that job, you get quoted that it's gonna take you a month, but you get it done in 2 weeks, you still get paid the same.
Exactly. You're paid for the job, not the time necessarily. Now, it could depend. You could, as an independent contractor, choose to bill based on your time if you wanted to do that. You also have control over how much you charge. So in my earlier example, the bookkeeper was paid $25 an hour as an employee, but then maybe could charge $80 an hour as an independent contractor. You got more control over your financial situation. There's a lot of push and pull between the benefits and detriments of each. And oftentimes, what is most beneficial to the worker is not what's most beneficial to the company. So for companies, they have a lot more responsibility when they have an employee as opposed to when they have an independent contractor, right? All of those benefits that we just listed for an employee, those are responsibilities then of the employer. So if an employer, for an employer, it may be more beneficial to try and classify somebody as an independent contractor because they are not responsible for withholding taxes. They're not responsible for paying half of the Social Security and Medicare taxes on behalf of the worker. They're not responsible for providing unemployment insurance benefits to the worker. There are a lot of safety regulations as well that then no longer apply. So from a financial perspective, it could be more beneficial for the company to have independent contractors rather than to have employees because those responsibilities are diminished somewhat. Now, they may be trading off and have to pay extra to the independent contractor, but it may be worth it for those to classify individuals as independent contractors rather than employees. Like I said, this is an area that's highly litigated though. And employers, a lot of employers, even big name employers, have misclassified individuals and workers as independent contractors when they should have been classified as employees. A few years ago, there were big lawsuits, especially I think it was in California, over Uber. So Uber hires, you really don't hire an independent contractor, you contract with them, but Uber hires independent contractors. People who drive for them are independent contractors. Well, the state of California said no, they're employees. I think they came to some, and this litigation lasted several years between the company and the state of California because the state of California wants people, the government wants people to be employees. It's a lot easier to get tax revenue from employees than it is to get from independent contractors. There are other reasons as well, but this litigation between Uber and the state of California, I think the state of California essentially, they may have gotten some concessions, but ultimately the drivers were still classified as independent contractors. But there is, like I said, that was big news at the time, and so it is a highly litigated area. Any other comments or questions or experiences you guys want to share if you've been an independent contractor or had an experience with that? I've been both. You can be both at the same time. You can be an employee at one place and then have a side hustle as an independent contractor. A lot of people do that. So the IRS, because this is so vague, the IRS did recently, over the last couple of years, come up with 6 factors to help determine whether a worker qualifies as an employee or a contractor. And all of these factors are evenly weighted, meaning that, like, if one of these is true but none of the rest of them are true, well then that one that's true might not push them over the edge of being one or the other. So the opportunity for profit or loss depending upon managerial skill. If you have the opportunity to make a profit, so you are, and think of it in terms of accounting, so your income exceeds your expenses, then that would probably indicate that you're more of an independent contractor and have an independent business. If the investments are made by the worker or the employer, so purchasing that laptop, purchasing the QuickBooks software, who makes the investments? Is another one of those factors. The degree of permanence of the work relationship. That's one I haven't talked about yet. So an employee, that relationship is essentially assumed indefinite when it is in place. So I can assume, as long as I don't do anything wrong, or financial situation doesn't change, or the demand the demand for faculty doesn't change, I can assume that my position here at DMAC will just continue indefinitely because I'm an employee. Normally with an independent contractor, it's time defined. Like, I'm going to do this job, and when that job is done, you have no more responsibility, I have no more responsibility, right? So the degree of the permanence of the work relationship. That may mean that there's a contract or not, a written contract or not, but whatever the assumptions are for the permanence. Nature and degree of control, we already talked about that, and that would be both behavioral and financial control. The extent to which the work performed is an integral part of the employer's business. So an example of that might be, let's say that I have an accounting business, and I have an office with several employees. I'm not a corporation, so I'm an independent contractor, but I hire other employees. And once a week, I hire somebody to come in and clean the office. Maybe they do it at night when everybody's gone home, but they come in, they do all the things necessary in order to keep the office tidy. That individual, that job is not necessarily integral to the functioning of my company. I could do it. I could have ask one of the employees to do it. It's not, my company's not going to cease to function if we don't have somebody to come in and clean. In that case, that job of somebody coming in to clean is not integral to my employer's business. Now again, this is just one factor. So a company can have employees who are classified as employees who do the cleaning, even though that's not integral to their business. But that's one of those factors that is considered. And then the skill and initiative required to perform the services, that's also one of the factors, not definitive, but one factor. So do I, like my example of my accounting business, I'm a CPA, I've attained a high level of skill in my field, and I'm the one who is directing everything. That indicates that I am an independent contractor, whereas if I've hired somebody and I'm training them, they don't necessarily have the skill set that I have, then that would probably indicate that they are an employee. So companies can have independent contractors, or they can have employees. Independent contractors who run their own business can have other independent contractors who work for them, or they could also have employees. Okay, so it's all dependent upon those factors, and then also the degree of control that who has that control. Is that clear? Kind of the distinction there? Any questions about that? Okay. If you have questions, let me know. I've got some other documents here that may be helpful. So here is this IRS checklist for independent contractors. So if an employer, I said, and as the video mentioned, there are some serious penalties and possibly even criminal sanctions against employers who intentionally misclassify employees. So it's good to, as an employer or as a company, to make sure that you are following, that you are classifying individuals correctly. So this checklist can be handy. So yes or no, profit or loss. Can the worker make a profit or suffer a loss as the result of the work? Yes or no. Does the worker have an investment in the equipment and facilities, whoops, wrong way, used to do the work? Does the person work for more than one company at a time? So this is another one of those indications. So my example of, I have a CPA firm and I hire an individual to come in and clean the office once a week. Does that individual clean other offices? Do they provide that service to other companies as well? If so, that would be indicative of them being an independent contractor. Are the services offered to the general public? So as you know, go back to the bookkeeper. If I'm an independent contractor and I contract with a company to perform their bookkeeping services, do I have other clients as well? Do I advertise that? Do I try to get additional clients to then increase my revenue? Instructions. Do you have the right to give the worker instructions about when, where, and how to work? This goes back to control. Do you train the worker to do the job in a particular way? So back to the QuickBooks example. If I'm an employee, my employer may say, okay, so this morning you're gonna work on XYZ company, and then this afternoon you got to work on the payroll for ABC company, and then tomorrow you're going to work on the reconciliations then for XYZ company. They're telling me what I'm going to do and when I'm going to do it. I'm an employee, most likely, in that scenario. Whereas if I decide what my priorities are for the day, for the week, for the month, that would be more indicative of an independent contractor. Do you hire, supervise, and pay the workers' assistants? So independent contractors might hire their own staff. Like I said, independent contractors can have other independent contractors or can have employees. Continuing relationship. Is there an ongoing relationship between the worker and the company? Work hours. Does the company set the workers' hours, or are they allowed to set their own hours? Full-time work. Now this isn't, again, necessarily, none of these taken individually are indicative. You can't just define whether somebody's an employer or an independent contractor based on one of these factors, right? It's all of them kind of together. Must the worker spend all of their time on the job? Independent contractors will choose when and where they will work. Must the individual work on your premises? Do they have to be here in order to do that job? Do you have the right to determine the order in which the services are performed? Must the worker give you reports accounting for their actions? Do you pay the worker by the hour, week, or month? Independent contractors are usually paid by the job, although there are certain industries where it is paid by the hour as well. Do you pay the workers business or travel costs? Do you provide the worker with equipment, tools, or materials, or does the worker provide those themselves? Can you fire the worker? An independent contractor can't be fired without subjecting you to the risk of a breach of contract lawsuit. Now that's presuming that there is a contract in place, right? If there's no contract in place, then that's a different story. But they can choose to not renew a contract, right? So if you are an independent contractor, might have companies sign an agreement that they're going to provide the services for the next year. But then after that year is up, the company could decide not to continue it, right? They'd have that right. Can the worker quit at any time without incurring any liability? Independent contractor has a legal obligation to complete the contract under most circumstances. Of course, there might be some exceptions if there's been some sort of legal breach in another way. But this is linked in this checklist is linked here in the schedule. You can take a look at that if you like. There's an IRS publication. I'm not going to go in detail. This talks more about control and gives more information about what we mean by control. And then we've got this fact sheet that goes through that 6-factor test in much more detail. So all of those are linked in here, and I guess I said I'm not gonna go through all of that in detail. I'm not gonna go through each of those. You can take a look at them yourself. Okay, so FLSA. Let's talk a little bit about the FLSA, and then we're gonna go, I've got some other specific videos from the Department of Labor that are put together that help define a lot of those points. So let's see. So the FLSA, remember, we've got these 4 aspects of it, 4 main characteristics of what the FLSA covers. It covers, and again, it's only employees, not independent contractors. It provides a minimum wage for employees. It mandates a minimum wage. Federal minimum wage is $7.25 an hour. There are some other minimum wages. Yeah.
I had a question about the independent contractor.
Yeah.
Can the independent contractor have like employees under?
Yes.
They can-
The independent contractor can hire employees, right? So if they have a business, in that case, they probably will have set up a business, and maybe they've even incorporated at that point, which would kind of make it a little bit different business organization. But yes, absolutely, independent contractors can have their own employees, and that would be another one of those kind of factors that would determine that, yeah, they're an independent contractor. They're not an employee. That's another distinguishing factor, though. An employee doesn't have other employees for that job, right? They don't have anybody under that they're directing, unless, I mean, if they're a manager, obviously, if that's part of their requirements. Actually, I think what I'm gonna do, let me see here. Let's just go through, I wanna go through real quick these 4 areas that the FLSA covers. So, minimum wage. Federal minimum wage, $7.25 an hour. That is only for, again, employees, and only for employees who are covered under the FLSA. Not every employee is covered or protected under the FLSA. Most in this country are, but there are some exceptions. But those who are covered, those covered employees, would be eligible to receive that minimum wage amount of $7.25 an hour. And like I said, there are some specific different minimum wages depending upon, and there are state laws that could supersede it if it's greater than the $7.25 an hour, but there are also other, and your book talks about it. We'll maybe go into just a little, some of those exceptions, like students who are working at the university, there's a lower minimum wage for students. There's a higher minimum wage for federal workers and federal individuals who are employees of federal contractors. There's a higher minimum wage for that, and there are certain exceptions to it. But the FLSA mandates that $7.25 per hour minimum wage for covered employees in the U.S. Overtime. FLSA also mandates overtime pay for hours over 40 hours in a week for those employees who are covered by the FLSA. Child labor. There are also specific child labor laws. Now this is actually kind of an older article. Let me see if this is still, nope, can't even find it. Okay, I should take that off. Iowa changed their child labor laws and made them more, I don't know if you'd use the word generous. They reduced some of the restrictions on, especially I think it was agricultural work for children. But the FLSA also covers child labor and all of those regulations that help to protect children who are working. And then there are some record keeping requirements as well of the FLSA. So these are, and remember, we kind of went through that list of record keeping requirements in chapter 1, at the end of chapter 1. 2 of those requirements, not 2 requirements, but a lot of those requirements are encompassed within that payroll register and the employee earnings record, right? Okay, let's go ahead and let me see here. I want to see if this, I don't want to reiterate. Let's go ahead and watch these again. These are put together by the Department of Labor. The Department of Labor enforces the Fair Labor Standards Act. So they are the enforcement arm of that. So they're the ones that regulate all of this. So who is covered by the FLSA is the first video. And hopefully the volume works.
To some of your employees,
Yep, good.
the Fair Labor Standards Act applies to most businesses and employees, but not to all. If the law applies to your business or to some of your employees, then you are an employer covered by the FLSA. Your business can be covered by this law in 3 ways. The first and broadest application is called enterprise coverage. You fall under that umbrella if your business takes in at least $500,000 a year in gross sales or total business, and you have at least 2 employees who handle goods that have moved in interstate commerce. As long as you have 2 employees, the second requirement is essentially always met because it includes use of anything that was made out of state. For example, pens, paper, cleaning supplies, phones, computers, or any other equipment. And that does not all have to happen at one establishment. You can have multiple establishments, individual related businesses, or even multiple corporations. And the activities of all of them may be looked at together to determine if coverage applies. For example, meet Sam. She owns and operates 3 locations of a fast food franchise. If these locations perform related activities under common control and with a common business purpose, the Department of Labor would consider all of these locations to be one enterprise and look at all of them as one business to determine if Sam has reached the $500,000 threshold for FLSA coverage. This would be the case even if Sam set up the businesses under separate legal names or even with separate tax ID numbers. Since Sam runs 3 separate locations of the same brand of fast food restaurant, it's one enterprise. In this example, if Sam's 3 locations each gross $200,000 a year, that adds up to $600,000, so she's reached the threshold. Her business and employees are covered. The law applies to every worker at all of Sam's locations unless an exception specific to certain employees applies. If enterprise coverage applies, everyone who works for your business is subject to the requirements of the FLSA. There are special exclusions that apply to some types of workers, but most employees who work for most covered enterprises have to be paid minimum wage and overtime, as the FLSA requires. The second type of coverage is called individual coverage, which applies when some of an employee's job duties involve her in interstate commerce, meaning business or work that crosses state lines. This can apply even if the employee doesn't work for an employer like Sam that is a covered enterprise. Individual coverage can be based on tasks as simple as making phone calls across state lines, sending emails that go out of state, processing credit card transactions, or traveling to other states for work. It is possible for some workers in a business to be covered based on individual coverage, while others are not. Individually covered employees who don't fall under any exception are subject to the law's minimum wage and overtime protections. So even if your business grosses less than $500,000 per year, if you have an employee who, for example, regularly orders products from out of state to be shipped to your office, that employee is individually covered by the FLSA. Anyone who is employed in domestic service, that is, housework work in people's homes, is also considered to be doing covered work. This includes maids, nannies, and home care workers. The third type of coverage is called named enterprise coverage. A named enterprise is a business that is covered because it's one of the businesses or occupations the FLSA specifically lists as covered, regardless of its size. These named enterprises are hospitals and other residential care facilities, schools including preschools, elementary and secondary schools, and colleges and universities, and government agencies. The important part to remember is if your business is covered or some of your employees do covered work, the FLSA's provisions apply. These include paying workers at least the federal minimum wage, paying workers overtime if they work more than 40 hours in a work week, keeping all payroll records required by the law, and abiding by the law's restrictions on work by children. When employers fail to recognize that their business is covered by the FLSA, it can lead to minimum wage, overtime, record keeping, and/or child labor violations. Those violations can result in back wage liability, additional damages due to the employees involved, and even financial penalties to the employer. If you have questions about coverage or other wage and hour topics, please visit our website, dol.gov/WHD, or call us at 866-487-9243 for more information. All calls are free and confidential.
All right, so they talked about the types of organizations and individuals who would be covered. Covered meaning that they have the protections, employees have the protections of the FLSA. The first one is called enterprise coverage, and if an employer grosses more than $500,000 a year, then everybody in that enterprise is covered by the protections of the FLSA. Doesn't matter what their job duties are or what they do. All employees of that organization would then be covered. Doesn't matter the size of the enterprise, it just matters that $500,000 if they gross more than $500,000. Now, a lot of companies don't gross that much. Think mom and pop stores and stuff. So, if the enterprise coverage does not apply to the entire enterprise, it's possible and actually probable that individuals within that enterprise will be covered by the protections of the FLSA. So those organizations that don't gross more than $500,000, if they have individuals within their company that are engaged in interstate activities, and this is a very broad term. Interstate activities, do you send an email to somebody outside of the state? That's pretty easy to do. Do you send mail outside of the state? Do you make purchases of items from outside of the state? If you do that at all, if the employee engages in that at all, then they as an individual are covered by the protections of the FLSA as employees. Okay, so you can kind of see how it would be it's essentially not everybody is covered. Well, I shouldn't say that. Legally, not really legally either. What's the word I'm looking for? For practical purposes, almost everybody is covered, right? Maybe not, it may seem like not everybody is covered, but when you actually dig into what the activities are that would then require coverage, pretty much everybody engages in those activities, right? You have to go online and search for an answer of a question. You're engaging in interstate activities. Right? It's very easy to do so these days. It's very hard not to do so at all. Right? And then we've got named coverage, and this is particular to specific industries, like they said, hospitals, schools, governmental agencies. They just are everybody who is an employee of those are just automatically covered. Okay? So those are the types of coverage. The ones that we do talk about these. Your chapter talks about them. You've got test questions regarding the requirements of those. So make sure you understand those different types of coverage. Any questions about those? So we're going to talk more specifically in this class about minimum wage and about overtime. And this is important because in a lot of our calculations that we're going to do, we're going to use minimum wage and overtime rules. Okay? So we'll go on to the second one here, in which we talk about minimum wage.
When the Fair Labor Standards Act complies, an employer like Sam generally must pay employees at least the federal minimum wage for every hour that they work. Currently, the federal minimum wage is $7.25 per hour. Keep in mind that state laws may set minimum wages that are higher than the federal minimum wage. If Sam's business is subject to both the federal law and state law, she needs to pay her workers whichever rate is higher so that she's in compliance with both laws. You can check the current minimum wage in your state on our website. For example, if Judy works at Sam's business's location in Colorado, where the minimum wage is $10.20 per hour.
Obviously
She
it
is required
changed.
by Colorado law to pay her that higher wage. The FLSA doesn't require Sam to pay her employees on an hourly basis. She can pay them on a salary, piece rate, or some other basis, as long as they receive at least the equivalent of the required minimum wage for all of the hours that they work in each work week. Let's say Judy works 40 hours per week and is paid a salary of $440. If you divide $440 by 40 hours, that equals $11 per hour. That means her pay meets the federal minimum wage requirement. Special rules apply to tipped employees, like bartenders and restaurant servers who regularly receive more than $30 a month in tips from customers. For example, if Judy works as a waitress, as her employer, Sam may consider her tips as part of her wages. Taking this credit for tips toward her minimum wage obligation is called taking a tip credit. When an employer takes a tip credit, the FLSA requires them to pay at least $2.13 per hour directly, and allows them to take credit for up to $5.12 per hour for tips the worker receives from customers during that week, to make up the remainder of the full minimum wage. In any work week when the worker's tips, when combined with the direct payment the employer provides, are not enough to reach at least the minimum wage for each hour worked, the employer must make up the difference. In addition to tips, Sam may also count other forms of compensation towards Judy's wages. These include commissions, some bonuses, or the reasonable cost of housing, food, or other facilities she provides for her benefit. Employers and workers may not make agreements calling for payment of less than the minimum wage where the FLSA otherwise requires that the employee receive it. The employer and the worker cannot make an agreement to break the law. Employers of workers covered by the FLSA must post a notice explaining the law's requirements, including the minimum wage, in a place where workers can easily read it. We provide these posters free of charge on our website at dol.gov/WHD. Some employers pay more than $7.25 per hour, but still violate the minimum wage requirements when they make deductions from workers' pay that reduce wages below $7.25 per hour. Please watch our video on deductions to learn more. When employers fail to pay employees at least the federal minimum wage, those employers have violated the FLSA. FLSA violations can result in back wage liability, additional damages due to the employees involved, and even financial penalties to the employer. If you have questions about the minimum wage or other wage and hour topics, please visit our website, dol.gov/WHD, or call us at 866-487-9243.
I assume you guys aren't gonna call them, so we can stop there. So the minimum wage, as I mentioned, $7.25 an hour. Federal, Iowa is the same, $7.25 an hour. Other states are higher, like I mentioned, I think last week, I think most states now have a minimum wage that is higher than the federal minimum wage. There are even some cities that have different minimum wages. There's actually a law in the books in Iowa that says that a city cannot have a different minimum wage than the state minimum wage. It could be anti-competitive, right? If, say, Ames has a minimum wage of $8 an hour and it's competing with employees from Des Moines and it's $7.25 an hour, well then you've got some competition within the state and within jurisdiction. So I think that's part of the reason behind prohibiting that. But there are some places where city minimum wage is different from the state minimum wage. As I had mentioned here, and this is sometimes kind of hard to wrap our minds around, and we're going to do a lot of calculations based on this. It's $7.25 an hour, but that's on average what your minimum wage has to be on a weekly basis. So that means you could be paid hourly, and most individuals who are receiving at least the minimum wage are paid on an hourly basis, but it could be in the form of a salary. It's just that on average, when you calculate out the hourly basis, the hourly rate, then it has to come to at least $7.25 an hour. So if an employee is making a salary of $290 a week, that is, and they work 40 hours a week, that is $7.25 an hour. If they're making a salary of $250 a week and they work 40 hours a week, the company is in violation of the FLSA because that does not calculate to at least $7.25 an hour. Okay? So, or piece rate, and we're gonna go through some of these different ways to calculate income as well, different ways of paying employees. Piece rate, think of if you're paid, let's say you work at a bakery and you're paid per cake that you decorate, right? So you get $25 per cake that you decorate. The employer can pay you that way. That's okay. But when they take the number of hours that you worked and the number of cakes that you decorated, it has to come out to at least $7.25 an hour that you were paid. If there's some amount under that, the employer is going to have to pay you additional. Tips. So this is we're going to talk about how to calculate tip income in this or income with regard to minimum wage when we have tipped employees as well in this chapter. This is one of those areas that students get tripped up on because there are actually kind of two parts to the hourly wage. There is the minimum amount that the employer has to pay, which is $2.13 an hour. Again, it can differ. Now, this is one of those areas where Iowa actually has a higher minimum wage for tipped employees. I think it's $4.25 or $4.35 an hour for tipped employees. Then because the assumption is that the employee is making at least the additional amount in tips to get them up to that $7.25 an hour. So if the employee is not making enough in tips, let's say that they worked 40 hours and they made $50 in tips, that's obviously not going to come to $5.12 an hour. That means the employer is going to have to make up the difference so that combined tips and the employer's portion equals $7.25 an hour. Okay, we'll go into some more calculations on that as well. Okay, questions, comments? Let's go to the next one, overtime. Sorry, it's so quiet.
As an employer, your stat requires or allows for employees to work overtime, meaning more than 40 hours in a week. It's generally required that she pays them premium pay for those extra hours. Unless specifically exempt, covered workers must be paid 1.5 times their regular hourly rate of pay for any hours over 40 that they work in a work week. Many people refer to this as time and a half. Here's an example. Last week, Jason worked for Sam for 50 hours at $10 per hour. He also earned a $50 production bonus for meeting food waste guidelines. To calculate Jason's regular rate, you take 50 hours and multiply it by $10, which equals $500. Then add the production bonus, which is $50. The total straight time earnings before overtime equals $550. Divide the total straight time earnings by the number of hours Jason worked. $550 divided by 50 hours equals $11 per hour regular rate. Jason's overtime then is due based on a regular rate of $11 per hour, not $10 per hour. The bonus in this case had the effect of lowering his regular rate of $1 per hour. It's also important to note that Sam cannot bank employees' overtime hours and pay them out later work weeks. She also cannot offer her workers comp time in lieu of cash when they work overtime. Only public agencies or other government employers are allowed to offer compensatory time off for overtime hours. Some workers don't have to be paid overtime because of the types of jobs that they hold. The law includes some specific exemptions that define situations where workers don't have to be paid extra when they work more than 40 hours in a work week. For example, an exemption from the overtime requirements of the FLSA applies to most drivers, drivers' helpers, loaders, and mechanics who are employed by a motor carrier and whose duties affect the safety of operation of the vehicles. When employers fail to pay employees overtime they have legally earned, those employers have violated FLSA. FLSA violations can result in bad wage liability, additional damages due to the employees involved, and even financial penalties to the employer. If you have questions about overtime or other wage and hour topics, please visit our website, dll.gov/WHD, or call us at
All right, so overtime gets a little more complicated than just the times 1.5 times the regular rate. As they started to get into some of the calculations there when you've got bonuses that might be included in the calculation of the rate. So, but normally speaking, we're talking about 1.5 times the regular hourly rate, which most people are familiar with, and that is calculated on hours over 40 hours in a week. So the first 40 hours are gonna be at whatever the regular rate is, and that regular rate has to be at least $7.25 an hour. And then the hours over that are gonna be calculated at 1.5 times whatever that regular rate is. Employees can still be paid a salary, hourly basis, piece rate, other methods of payment. What has to happen is that employers have to calculate what that regular rate is. So if they're paid on a salary basis, and they gave some examples there of employees that were paid on a salary basis, but if they're entitled to overtime pay, then you have to calculate what their regular rate is based on what their ordinary salary is. And then that is going to be used to calculate what the overtime rate is. It is on a work week basis. Yes?
So long as they calculate it on the over 40, can it also be calculated daily for over 8 hours a day?
So there are certain industries, actually it's very limited. There's no requirement for them to do it on over 8 hours a day. Certain employers
I'm
and
just making sure that
they could, yes. Employers can offer anything more generous. They just can't be less generous, right? And like hospitals are allowed, because of the shift work that's done, and oftentimes hospital employees will work, like 12-hour shifts, 3 days in a row, take a couple days off, and then have another three days. They have some special rules where it's hours over 80 in a 2-week period. So their calculation, but it's very specific to hospital workers. For most workers, it is done on a work week basis. So, and it can be, you can choose the work week. It can be Sunday to Saturday. It can be Monday to Sunday. It can be Wednesday to Tuesday. You just have to be consistent with that. So all of the hours that are worked within that work week, that is what's calculated for purposes of overtime. So in the example that they gave there, they had one employee who worked 50, I don't even remember how many hours it was. So 50 hours in 1 week, but then in the next week, and they're on a bi-weekly pay basis, so they pay every 2 weeks, the next week they only work 20 hours. Well, they're still entitled to 10 hours of overtime, even though they only worked 70 hours overall. 10 of those extra hours was in one of those work weeks. So they're still entitled to overtime pay. Okay, did you have a question? Oh, okay, sorry, I thought you were raising your hand. Okay, this becomes more complicated when you have like, it's like for weekly pays and bi-weekly pays, it's not so complicated. When you have pay periods that are semi-monthly, and we're gonna go through these pay periods as well, which means being paid twice a month. Now you've got pay periods that are overlapping those work weeks. When you're paid on a monthly basis, again, you've got pay periods that are overlapping that work week basis. So now it becomes a little bit more complicated because you have to determine how many hours employees worked in the previous pay period to continuously, because that work week basis does not change. So if the pay period ends on a Wednesday, but your work week is Sunday to Saturday, now when you're calculating overtime for that week, you're gonna have to look back at the previous pay period to determine how many hours were worked before, and then how many were worked after the start of the next. We'll go through some problems on that stuff. I just wanted to kind of give you a preview. Calculating the regular hourly rate in order to determine what the overtime rate is includes certain other types of pay as well. And the example they gave here were bonuses. So that employee who got a $50 bonus, now even though he would ordinarily be getting $10 an hour, because he got that bonus, it raised his regular rate for the purposes of calculating overtime to $11 an hour. Okay, so, and again, we've got problems that will cover that as well. Comp time. So there are only specific industries where comp time is allowed. Employers can offer compensatory time off to employees if it's within the same period. So you worked 10 hours on Monday when you usually work 8 hours. Well, they can give you 2 hours off during that week and not have to pay you for any overtime. But you cannot carry it forward. So if you worked 10 hours of overtime during this week and you're paid on a weekly basis, they can't say, well, I tell you what, we'll give you an hour and a half, we'll give you 15 hours off next week. They can't do that. They have to pay you for the overtime. And there are certain, they talked a little bit about exemptions from the overtime rules. There are certain industries and job classifications that are exempt from both the overtime and minimum wage laws, but they have their own requirements, different types of requirements. All right. Questions about any of that? That kind of gives you a preview. We're going to be looking at we're kind of out of time here. We'll go into a little bit more depth when we start looking at some of our slides. Because here's what we're going to do. I do just want to give you a quick preview of our chapter. We've already gone through quite a bit of this. Major provisions of the Fair Labor Standards Act. We've already really talked about most of those, so we've covered that. Define hours worked. This is something we have to do. So we talked about how much employees are paid on an hourly basis, but for their work. But what is work, right? What is included in work time is if you're in a job where you are getting dressed, you have to change your clothes for that job. Does that time that you're getting dressed count? What about sleep time? Sometimes employees are required to sleep. Think about medical professionals. If they're working 24-hour shifts or something, they're required to sleep a certain number of hours. Or airplane pilots. Both of those are probably paid on a salaried basis, and we don't really have to worry about the overtime, but we have to define what hours worked are. How do we determine what is time that is worked? We're going to look at some of the records that are used to collect payroll data. That's a pretty short section there, mostly time cards and things like that, but different ways that can that time can be collected. And then we're gonna do some calculations. Yay! Calculate the regular and overtime pay, which we just gave you a preview of in that video, and talk about some specific types of compensation plans. Okay, so in the meantime, this weekend, if you can crack your book and give chapter 2 a look and get started there. I know some of you probably aren't finished with your homework for tonight, so work on that obviously, but then get started taking a look at chapter 2. Questions? Okay, cool. Have a great weekend.